Welcome back. Well, counting down to pre-open, about 5 minutes left. We have Chandan Tapari of Motilal Oswal joining us, and Espitilson of espitilson.com is also joining us. So we'll discuss some stock ideas and some fundamentals. Mr. Tilson, good morning. Let me come to you first. Your thoughts on the recent rally? Of course, I know you have been bullish for the last 2 weeks, but do you think this is likely to continue, especially on the Bank Nifty?
Anuj, before I reply that, let me first wish all the women on this Women's Day and Women Power. And more especially, I'll take a 1 minute, but the kind of my association with channel in this last 17 years, I have probably seen this is the only channel where the women powers have really got groomed. If I take the names on the channel, off the channel, production side, guest coordination, maybe Shireen, Lata, Surbi, Sonia, in fact, the linked list is long, and my salute and my best wishes to all. I've seen them rising to this level, and thanks to channel, in fact, I won't hesitate in saying that the other channels, in fact, have taken away the woman power from this channel also. But we have kept that flag flying high for the channel, thanks to the women. So my respect and my best wishes, because I've seen them get blooming, and I'm really happy. So my all best wishes for the grand success to all the woman power who has been making this channel to remain #1, and my wishes continues for the next 25 years, next 50 years.
Oh, thank you, sir. Before you start answering Anuj's question, I can speak for everyone, on behalf of everyone, that we have learned a great deal, a very great deal from you, Mr. Tulsian. Thank you for all that you taught us.
And for mentioning us, Mr. Tulsian, thank you, because you made my day, my moment, my week, everything by giving us these wishes.
Let me tell you, Lata and Sonia, I'm telling this with my heart, and I have been seeing you all, getting, rising on the level, and I wish all of them, in fact, many of them, I treat you as my daughters, and, I've seen you all getting groomed. I'm really very happy, and I pray God that you all keep this channel's flag high, flying high, and all my best wishes and all my respect to you all. Now, replying on the Anuj question, yes, I have been taking the positive view on the market from 20th February on the Wednesday show, when I've said that I'm seeing the buying coming with vengeance. But I think that this momentum is going to remain there, maybe for the next about couple of months till we see the elections outcome. But the more especially if you really want to play the 1 week, because this I have been stressing on this volatility being seen or likely to be seen with the introduction of Nifty also, weekly option expiry. So if you see this 1 week, Bank Nifty has risen by 700 points. We have only seen the 1 week got completed for this March series, and Nifty has risen by over 200 points. So you have no reason to see the same buying, the momentum, or the positive bias seen continuing for the next week as well. So yes, the things are likely to take a pause, and this will coincide with the advanced tax selling also. I always say this 4 times in a year, that ahead of the advanced tax payment, you see the selling coming in. And this selling probably will last up to Wednesday, and the weekly option expiry will end on Thursday. So I won't be surprised to see the Bank Nifty getting corrected by maybe about 200-300 points to end at 27,500 levels, or maybe the Nifty at 10,900 or 11,000 levels. So yes, the next 3 or 4 days are seen to be cautious. In fact, these are just the mechanical analysis of the volatility to be seen ahead of the advanced tax selling, and after having seen Nifty having risen by 200 or 225 points in this last 1 week, or maybe 700 to 750 points for the Bank Nifty. So yes, keeping cautious view till Wednesday in this week.
Okay.
Well, sir, just wanted to look at the markets. We're going to see the pre-opening rates coming in. I think, okay, by the time they settle down, why don't we have Chandan with us? Chandan, good morning to you. Thank you very much for joining us. What are your trading strategies today?
Yeah, good morning. Wishing you all the happiness and happy Women's Day. Talking about the Nifty first, we have seen the strong momentum in last 3-4 trading session. However, yesterday it witnessed some consolidative move, but momentum was continuously visible in the Bank Nifty index. We have seen some put writing at immediate strike, and the option band signifies slightly higher band in the market. So the data setup indicates now till it holds above 10,950, 985 zone, the momentum could extend to us 11,200, as OI congestion is shifting to 11,200 strikes. So setup indicates the positive to range bound, and the momentum is clearly visible in the market. So looking that in mind, recommending to go long on Reliance Industry. This stock has given a consolidation breakout and also surpasses falling supply trend line on the weekly scale. This momentum is happening after the correction and the consolidation of last 3 weeks, and the stock has seen put writing activity and also supporting to 50-day exponential moving average. So entire data setup indicates the positive momentum in the Reliance, and I think this stock has potential to lead the Nifty to the higher territory. So recommending to go long on Reliance Industry with a stop loss of 1252, and this stock has potential to move towards 1325 to 1327 levels on the higher side. Second trade, that is buy on Axis Bank. This is one of the strongest counter in the private banks. We have seen the strong momentum in ICICI Bank and Axis Bank, and because of that, Bank Nifty also rallied by around 500 to 700 points, and it tested the major swing high of 27,750 level. Supports are gradually shifting higher in the Bank Nifty, and earlier resistance have taken out, including 27,350, 27,500. So higher bets in the Bank Nifty suggest the up move, and that's why we are expecting the Axis Bank to even perform better. So here the positive momentum in the Axis Bank. The stock has seen the positive price pattern. Higher highs, higher lows is clearly visible. Longs are in take. Positive rollover also indicates that momentum could continue. So recommending to go long on Axis Bank with a stop loss of 722. And here we are expecting a move towards 764 kind of level. One more trade that is on the sell side, that is Oro Pharma. After the recovery of last couple of days, the stock has seen some profit booking. It has failed to surpass its immediate 50 exponential moving average and also negated its formation of higher highs, higher lows. Some built-up of short position was also seen in the counter. So some weakness could be seen in the Oro Pharma. One can sell with a stop loss of 743, and here we can test the level of 698 in lower zone.
All right, Chandan, thanks a lot for giving us your strategies. The pre-opening rates are kicking in, by the way. The Nifty is absolutely flat with a bit of a negative bias. A couple of stocks to look at. Wipro is under a bit of pressure. Expected lines, I guess, because the Azim Premji Trust is selling up to 0.4% stake in the company, so 3% lower there. The price range is at a discount. The range is 255 to 260.7, so it's gravitating towards that. And Tata Motors as well is under a bit of pressure right now. Jet Airways, more planes grounded there, so that stock is also down about 3.5%. Mr. Tulsian, quickly, I wanted your thoughts on how to approach a stock like Tata Motors. Now, we've been discussing this in the past, but the bad news just doesn't seem to end. This morning as well, China data is very, poor from Jaguar Land Rover's retail sales. You expect that stock to remain below 200 for a while?
Sonia, looks like, and in fact this is what I've been saying yesterday also, I've said that probably the opportunity of this rise in the share price should be used to exit, because the technical factors is short covering, and maybe the and actually this type of bullish trend has to get fizzled out at some point, which is likely, which has happened yesterday also. So probably yes, prices are likely to remain below 200 rupees, and I won't be surprised to see it getting corrected by 20-30 rupees further in this next couple of weeks or so, because I don't think that the positive can really be expected from the company in the next at least 2 quarters, which must get reflected into the financials also of the company. So maybe Q4 and Q1 numbers have to be seen to be watched carefully. Until then, definitely I'll keep the negative bias and remain away from the stock call.
At the moment, the currency has opened weaker. Not a whole lot, 18 pice weaker. The dollar it was 69.99 to buy a dollar yesterday. Today it's 17.17. Okay, 70.12 now. It started off at 70.17. So it's not a very big knock, but perhaps the biggest strength of the rupee is over. That was more position adjusting. Mr. Tulsian, I wanted to ask you about steel. Yesterday, Reuters was reporting that a province called Hebei in China is cutting steel capacity by 14 million tons because of some air quality problems. More generally, are you positive on steel in India?
See, Lata, I think that China is seen to be continuously cutting the steel production capacity. If you really take a call in last 18 months, which used to be at 1300 million ton, got reduced to about 850 million ton. Induction furnaces seem to have totally got stopped because of the pollution reason also. So yes, the China problem is seen to be continuing, and in fact, because of this trade war, China is not able to export also, so they are forced to cut the production, and in fact that is seen quite positive. And in fact, if you take the position on the US, maybe because of this China trade war, US has restarted, or in fact the electric arc furnace have restarted, and the things are seen improving there, and in fact the demand from the US pocket is seen to be coming in. So yes, the things are looking in fact quite positive for the steel sector for the next 4 months or so, because generally if you take a call, Q4 is always seen to be the best for the steel companies. And I would rather be more positive on the integrated steel makers, the smaller players, where they have their own iron ore supply also. Because if you have noticed, even iron ore prices have risen by about maybe 20-25% in this last 1 month or so. NMDC have raised the prices. So yes, keeping positive view on the steel stocks for the maybe next 3 to 4 months view for the Indian steel stock makers. Maybe like JSW Steel, Steel Authority of India, or maybe the smaller players like Godavari Power or maybe Sarda Energy kind of stocks.
Okay, well, sir, I also want to ask you about Arvind Fashion, but before that, let's find out why that is in the news. It's all set. Arvind Fashion is all set to list on the exchanges today. Our colleague Nupur joins in now to give us all those details. Nupur, over to you.
Arvind Fashion, the demerged retail entity of Arvind Limited, will be listing today on the stock exchanges. The shareholders of Arvind Limited received 1 share of Arvind Fashion for every 5 shares held in Arvind Limited. The equity of Arvind Fashion is around 5.8 crore shares. On valuation front, the average FY20 EBITDA of analysts works out to be 440 crores, with the most analysts valuing Arvind Fashion at an EV to EBITDA multiple of 18 to 90 times, and the market cap works out to be around 7,100 crore to 8,000 crores, which translate into a listing price of around 1250 per share to 1400 per share. The other players in the same segment are trading at an enterprise valuation of 16 to 49 times. In the last quarter, Arvind Fashion reported a revenue of around 1260 crores of over 8 crores, which is 8%. Also under the Power Brands, company reported a sales growth of 28%. Going ahead, management remains positive on their Power Brands, and also with the most analysts valuing at 18 to 19 times, mostly the company will list in the range of 1250 to 1400 per share. Let's see at what price it settles on the stock exchanges today.
Thank you for all that data, Nupur, especially the valuation comparisons. Mr. Tulsian, your thoughts on this, sir? Where might it list and what is its fair price?
See, Lata, if you really ask me, I would say that it should not list about 1200 rupees, but that may not happen because just I quickly go through the data points, see the listing of Anup Engineering, because for the first couple of weeks the stock trades in trade-to-trade category, that is every trade is marked as a delivery. What has happened with Anup Engineering? It is continuously hitting 5% upper circuit. Yesterday's closing price was 550. I don't think that the Anup Engineering has such a high value. In my opinion, it should not have a value of more than 400 rupees. Similar things may happen with Arvind Fashion also. I won't be surprised to see the share moving to about 1500 also in the next 1 week or so on the trade-to-trade mechanism, which I have said. So in my view, I don't think there is no reason for the share to list above on a multiple of more than 20. It should be sub 20 EV to EBITDA, and that translates into a price of 1200 rupees. And if I quickly go through the breakup value also, because you are getting 20 rupees value from Anup Engineering, if you divide 550 by 27, the ratio of conversion, 90 rupees with Arvind, and if you take the about 250 rupees as the valuation, for the Arvind Fashion based on 5 divided by 5, because 5 shares of Arvind got 1 share of Arvind Fashion, so that comes to 250, 20 and 90, that works out to 350, 360, at which the Arvind combined and Arvind used to rule. So in no case, my advice would be that those who have got the shares of Anup Engineering can book the profits now at 550, and if you are getting the share of Arvind Fashion below 1200, then only look to buy, and those who will be getting the shares of Arvind Fashion can look to book profits if it keeps hitting upper circuit for next 3, 4, 5 days, maybe at a level of 1450. So take a range of 1200 to 1400 for the time being, but ideal valuation range should not be over 1200 rupees for Arvind Fashion.
Okay, well, just to get some more stocks on board, Jet Airways is actually seeing a big cut down, about 2.5%. Yesterday at 8 p.m. they came out with a press release saying that 3 more of their aircrafts have been grounded because of non-payment to lessors. So now, as we know, over 40% of their 123 fleet has been grounded because of non-payment. Mr. Tulsian, very quickly, if you can give us your view. I mean, we've discussed Jet Airways at length, but at this 230 price, what should one do?
See, Lata, so Sonia, definitely this news is seen quite bad, because every day you are seeing 4 or 5 aircraft getting grounded. But my hopes are alive, because the moment you see any kind of resolution, because the lenders are seen to be working very hard, SBI is seen to be buying the other lenders, those who are not agreeing to all this provisional resolution plan where the Etihad is looking to infuse additional 1500 crore, even Naresh Goyal is looking to. I am quite hopeful that once you see these things happening, taking any progress or any development on that front, then the stock can move to a level of 255, 260, which we have been giving the target, and that target is seen and likely in the next 1 month or so. So in spite of this negative news of aircraft grounding, we are keeping positive view on the stock.
All right, Mr. Sen, thanks a lot for joining us. I'll talk to you in closing bell, of course. Now let's take the 9-10 calls. The pre-open has settled. Very interesting. The Sensex is up 28 points. The Nifty down 19 and the Bank Nifty down 78. Ashwani, is there a trade on the index and what's your 9-10 call?
See, at least one buy trade should be taken at about 11,000, 11,020 if it gets there. Often the Nifty and Bank Nifty, etc., they bounce back, and you must recall it took us 4 months to cross 11,000, 11,020. So now the support is also equally strong. So wait for a 40, 50 point dip, and then maybe second half could be a little better. Axis Bank is a buy with a stop of 728 and look for targets of 750.
Okay, Prakash, what about you?
I like ITC. ITC can climb to around 295, 300 points. That's the level I'm looking. And stop below 287 should be okay. Looks good, ITC.
Okay. Mitesh, what would be your big 9-10 call?
Yeah, I also have ITC as my big call. I think it's heading towards 296, possibly 305 after that.
Okay. Well, at the moment, the pre-opening has settled and it's the Nifty Bank which is struggling a bit. I'm not surprised. A weaker rupee usually has that impact on banks, at least for starters. And then, of course, other factors take over. But for the moment, it's starting weak. Actually, why don't we get to Mangalam? He's put together some brokerage reports. Mangalam, basically future retail, brokerage reports on future retail. What are they saying?
Future Lifestyle, Lata. It's the lifestyle arm of the business. So CLSA has written on Future Lifestyle. Remember, this is the company that operates the FBB as well as Brand Factory and Central Stores. So they see Brand Factory business as the most exciting part of the business, given its near monopolistic status. Remember, the business mix for the company has been shifting rapidly in favor of Brand Factory. This is the business which gives you branded clothes at a discounted price, so which is why the monopoly out there. In the third quarter itself, the company opened 13 Brand Factory stores as compared to 1 Central Store. So yes, the business mix is indeed shifting. CLSA in its report sees the revenue coming in from Brand Factory at around 43%, and this compares with 38% that the company has done in the first 9 months of this year, which in itself was a growth from 32% year on year in 9 months FY18. Brand Factory as a business, remember, has higher return on capital invested or capital employed. That's primarily because you get a premium for the brands that you're selling, and as a result of this aggressive expansion and higher ROCs, they see value unlocking opportunities. Remember, the company has several owned and investee brands, so any sort of value unlocking out there would be a positive for Future Lifestyle. As a result of that, they retain their buy call on the stock, and they've upped the target price marginally from 560 rupees to 571 rupees.
Okay, thanks a lot for that. Well, 1 more minute to go, a minute and a half actually. Prakash, I just wanted your thoughts on some oil marketing companies. All right, let me pose that question to Ashwini. Ashwini, oil marketing companies have been the big gainers this month. Any trades here?
You know, it's messy because oil is going up, but oil marketing stocks are also going up. I think the financials are showing much more traction. So this decline on financials, I would like to buy. Oil marketing, I'm still kind of flat.
Okay, I was actually going to ask you whether you're going to be selling any of the PSU bank stocks today. Let me pose that to Mitesh. Any sells in the finance space? I thought maybe in the banking space?
So Lata, I think wouldn't take a sell call. Most of the stocks are now showing positive traction. They've run up in the last 4 or 5 days. They might give you a mild pullback, but I would be a buyer on that pullback.
Okay, all right. So looking for the dips to buy actually. Well, at the moment it does look like it's going to be extremely flat for the Nifty and the mid-cap. It's only Nifty Bank, like I have been telling you.
HDFC Bank will start lower because it will adjust for that expiry move.
3 p.m. move.
That 2:30, 3 p.m. move. Like it adjusted last week on the way up. This time it will adjust on the way down. So that essentially is not a drop. 11 rupees. It's basically covering for that. So after that, I think let's see.
After that, it may be as flat.
After that, let's see how it moves.
Okay. Well, there goes the bell, and it's a 0.3% downtick, 30 points off on the Nifty. It's reaching that level where our technical guys said that they may buy. 11,020 has been taken, 11,017, 18 as I speak. It seems to find its feet there between 17 and 20. and that's 37 points, a third of a percent. Probably this is the trading zone or the buy zone for our experts. We'll just get back to them in a minute. Sensex down 85.90, 36,640. And the Nifty Bank is down a third of a percent. So it's all shoulder to shoulder. Nifty Bank down 100, 27,650. The mid caps are down a quarter%. So nothing much to choose between the indices. Wipro is the one expectedly that's lost about 3.25%. Remember, Premji Trust, the owner trust foundation has sold about 0.4% of its stake. They routinely do that actually for CSR and for charitable purposes, but well, that's taking a knock at the moment. ONGC down 2%. Lower crude is eating into that interest in that stock. Hindalco, IOC, Tata Motors. Much of this is the China weakness that's telling on these stocks. Metals would be down with China's trade deficit, trade numbers, export numbers coming in sizably weaker than expectation. Yeah. So there is clearly a knock on anything that's exposed to stocks related to Chinese growth. So metals obviously are all weak today. HP, even HP is weak despite the weak crude numbers. Asian Paints, Maruti, one would have thought that HP and Asian Paints would benefit from that, but none of them are acting like crude beneficiaries at this point in time. The losses continue for all these stocks. It's a very short list that is in the green, and that includes ITC, which was buy with our technical guys. HUL as well is up about 0.5%, ITC 0.5% higher. M&M, Power Grid, the Bharti Twins. That's the list of green.
Okay, well, for the mid-cap index, it's moving in tandem with the frontliners, so down about 0.2%. Nothing alarming, just a shade off, about 30 points lower for the index itself. Laxmi Vilas Bank, on the back of that QIP that is launched, that stock is down almost 6.5% right now. Jet Airways has been under a bit of pressure in pre-opening. It was down as well. Let's see the first tick on Jet Airways, down about 1% as more planes have gotten grounded. A couple of these vulnerable names like Suzlon, JP Power, etc. are all in the red. Some metal names, once again in the broader markets, down about 2%. Motherson Sumi has been under a bit of pressure lately, so that stock is down. DHFL continues to reel under pressure, so 1.5% lower there. Ashok Leyland is also down almost about 1% or so. Subdued start. On the upside, though, a couple of stocks do deserve mention. Some of the PSU banks like Bank of Baroda, etc., continue to move up. And you have, some of these names like Nalco, etc., that are just holding up in the green. But otherwise, it's a lackluster start. Anuj, it's still holding on to 11,000. Yeah. So you reckon that could be the pivot point?
The dip is bought, actually.
Let's see. I think yesterday's high for me. That's the reference point. Somewhere around 11,075. It's the mid caps once again seeing buying traction. Tata Chemicals, the stock that we were watching out for, is now the top F&O gainer. Something building up on that stock. The Nifty mid-cap, look at that move that we have seen straight away into the green. So that's good news for traders, that at least the first dip has been bought. That happens, of course. There are other stocks also moving up. Bank of Baroda, for example, Tata LXC, ICICI Pru is moving up. So a lot of stocks moving up. United Breweries and United Spirits on a Friday, both these stocks doing well. So overall, mid-caps already in the green. The Nifty is still down about 20. Let's see. I think there will be an attempt to at least buy the first dip. Whether there's a second dip or not, we'll find out. Ashwini, your thoughts on market opening, and is there a trade for you?
See, it hit the lower end of the range, which was about 11,000, 11,020. And from here, it's seeing a strong comeback. I wouldn't be surprised if you get back towards 11,080 to about 11,100. Because the whole point is that there may be stiff resistance at higher levels, but the support at lower levels is equally strong. So that 950, 10,000, 950 to about 11,000 is a strong zone, and it will not get taken out in a hurry. My sense is that again, it's that sort of day where things open lower. And by the time you are in the first hour, you can see easily, the pullback getting stronger and stronger. So my sense is that by 10:30, 11, you should have a fairly serious pullback.
Okay, well, Future Lifestyle is one stock that's moving up. Mangalam was just telling us how CLSA has a rather aggressive target price of 571 on Future Lifestyle. It's a big mover at the moment, 2.5% higher there. Mitesh, any thoughts on market opening? It's now flattened out completely. And any individual stocks that caught your eye?
See, I think that's as per expectation. Because we are in up move, any dips of 30, 40, 50 points, we could buy a opportunity. I think that's already playing out. Couple of stock names on my list. Godrej Industries is a buy, Indeed is a buy, and Mahindra & Mahindra is showing division. So I would be the 3 stocks.
Okay, the other stock early in the morning is one stock which has seen quite a bit of buying of late. Ashwani, any thoughts on this one? Yeah.
See, basically, even all of these PSU stocks are showing upside traction. So anywhere where there's a strong stock, early morning gap down should be bought into. So even where the rallies are kind of stalling, I think BEL, BEM, PSU banks, so entire PSU group is looking like buying is coming back there.
Oh, okay, gentlemen, thank you very much for joining us with your 9:14, 9:20 calls. As the market actually, the first dip has gotten in the mid-cap space, even down just about 0.2% at this juncture. An important stock that you should keep on your radar should be Laxmi Vilas Bank, actually. The QI opens and Abhishek has been able to get the first few details on the price at which it's going. Abhishek?
Well, Lata, Laxmi Vilas Bank has launched a QIP of 500 crore is what sources is telling us. The floor price 65.96 per share are offering a discount of 5%. Now, what this does is that the Tier 1 ratio of the bank actually improves to 8.16 versus 5.58 that they recorded in Q3 FY19. So, the improvement in Tier 1 ratio actually helps in mitigating the risk of the bank falling under PCF framework by the end of March 2019, if at all they had not done this QIP. Book value largely remains same at 65.7 versus 65.6 that they did in Q3 FY19 on account of an equity dilution seen anywhere between 25 to 30%. Back to you.
Hey, Abhishek, thanks a lot for that. The market's getting a bit tricky now. Once again, the mid-cap index is into the red and the Nifty slipping a bit from the high point. Punita Kumar Sinha, managing partner of Pacific Paradigm Advisor, now joins us. Punita, good morning. Thanks a lot for joining us. First of all, happy Women's Day to you and of course everyone in your family. Your thoughts on the kind of market move that we've seen over the last fortnight? Is it indicating that perhaps there's some kind of bottom formation?
Well, first of all, happy Women's Day to all the women on the channel. I can't say that to you, Anuj, but Sonia and Lata.
He has three gorgeous women now. Punita at home. He has daughters.
Okay, good. So now, if you look at the markets, India has actually been the worst performing market. I think not worst performing of all markets, but of all major markets. And while some of the other Asian markets, particularly China and the US, have rallied, India has actually been quite a laggard, and we know the reasons for that, right? So I think going forward, there is still a lot of uncertainty. Elections are around the corner, and so I think that will kind of keep a lid a little bit on the markets until after May. But if you look at the valuations of particularly the mid caps versus the large caps in India, I think that discount is actually quite wide. Mid caps are now trading at much wider and lower valuations compared to even historic gaps between the large and the mid cap. So I think there is a lot of value for long-term investors to invest in some of the mid caps names where you think there is going to be quality as well as growth that comes at a reasonable price. I think large caps too, there are some stocks in particular certain sectors where things are still looking up, particularly the financials. But I would say right now, at least for foreign investors, the action is all focused and the headlines are all focused on China.
Okay. Good morning, Punita. Just on the note we began, has it really mattered being a woman, or has life largely been gender agnostic? The decisions you took or the decisions that were taken about you?
You mean in my career?
Yes,
or
yes, in your career.
Just in the last few years or in the last 20 years?
Any which way?
No, of course, I think, first of all, the world has changed. Today, actually an advantage to be a woman, particularly for the young women coming into the workforce, because everybody is very conscious of gender diversity. In boardrooms, that's what we talk about. And so if there are two equally good candidates, then a woman might get preference, whether it's in a university, whether it's in a job. But during the last 25 years or 30 years of my career, it has actually been a bit of a disadvantage because we were entering professions, particularly investment management. I remember I was the first non-white person in the investment management profession in Boston, let alone woman or man. And then being a woman on top of that wasn't easy.
Okay.
Yeah, Punita, hi, good morning. It's interesting you say that, because if you go by at least that controversial NSSO survey, it says that more women have dropped out of the workforce in India now compared to what we saw about 2 years ago, or at least in FY12 when the survey was conducted last. And just to go by the numbers, only 24% of women above the age of 15 are now part of the workforce as of FY18. Why do you think that is? I mean, what are the challenges that we are facing now compared to earlier?
No, I would say actually, I don't know about the data, but at least when I look at the companies that I'm on the boards of and in the investment profession, I see more women entering the workforce in professional roles. So we see a lot of women. I think at the junior levels, there's almost like 40-60 or 50-50 women-men ratios in many of the companies. It's just that as you go up into leadership positions, that's when you see fewer women making it to the top and women dropping out. But the numbers also don't capture that a lot of women are self-employed. They're also doing a lot of consulting and other work that is not being captured in some of the numbers you're looking at, I think.
Okay. Well, actually, even as you speak, our producer is very helpfully giving us data on gender inequality in terms of pay. I saw a lot of professions, IT, ES, and industry, manufacturing. Sumaira, what about media? Are we being underpaid compared to our males? We would like to find out. But Punita, to come back to the point that you made first on, China being now a little more attractive to foreign investors. What's your sense about the Indian growth story as well? We saw some sputtering because of probably the debt market problems, and then we are seeing this continued slowdown in auto. Does the growth story sputter for a goodish bit of 2019? When do you see it, overcoming these problems?
So before I go to that, I just wanted to make one point. US is just discussing potentially disclosing gender pay equality and numbers by mandating all listed companies to do that. So that's just leaving that thought and moving on to the growth story of India. So, I think the worst is kind of behind us, because I think the financial sector crisis that we saw was, keeping a lid on growth to some extent. Credit growth was tight. I think worldwide we're seeing inflation low, interest rates probably again coming down a little bit or not really going up. So I think that will help. China is definitely easing liquidity and giving fiscal stimulus. So I think in India too, I think that the worst is behind us, and I think growth will pick up. Right now we are into this period of uncertainty where no significant policy decisions or government spending can be done until elections. And so the big growth driver in the past has been government spending, and that is going to be kind of going cautiously slow until a new government is formed. So private sector is stepping in, credit growth is going to pick up. So I think that things are definitely going to improve, and which is why I was saying that certain mid-caps long-term might be a good place to be in.
In fact, you said mid-caps and you also mentioned financials very fleetingly. In that context, we were just discussing a while back that how some of these companies where there are new CEOs on board, whether it's a Yes Bank or an Axis Bank, they've delivered great returns this year already. Is that a pocket that you like, some of these corporate-facing or maybe private sector banks in general?
Yeah, I think the valuations of some of the really high-quality private sector banks are obviously not attractive, but some of the other ones where we saw a big overhang last year due to governance or other issues, and now we have new CEOs. So there is a lot more optimism and hope that the problems are behind us, and the new CEOs will set a direction that is, going to be steady. And therefore, there is a re-rating that we are seeing in some of these private sector banks that have lagged last year. And I think that story can still continue, because the valuation disparity amongst some private sector banks and the others is quite wide.
Okay, by the way, the market, there are a lot of stocks picking up now. We spoke about BEML as a first stock in the morning. That now is your top F&O gainer. Just look at the chart intraday. There's quite a bit of buying which is happening here. Eicher Motors is the other one. In fact, ever since that sales numbers, it looks like it's put some kind of bottom in place. Just look at that move on Eicher Motors. This is a big move happening from the low point, from 21,480 to 21,750.
It's a big fat stock to gain 1%.
Exactly. Punita, your thoughts on what's happening with the auto space? Is the worst priced in because the stocks have now stopped reacting to weaker sales?
I mean, the sales have actually definitely been weak, and if you see during elections, some of the sales actually pick up, but that phase hasn't started yet. So I think that as interest rates sort of stabilize, and I hope they don't go up from here, but it's very hard to tell what happens 6 months from now. But at the moment, they look like they're stabilized. The rural spend has by the government has also been quite positive. So anything that is rural oriented in terms of autos should see a boost. And you have to isolate Tata Motors out of this, because Tata Motors has its own sets of issues that are going on, and that's the largest part of sort of the auto index. So if you remove that and just focus on some of the others, I think things are probably going to pick up from here. Steel prices have also come off a little bit, and that should also help their margins.
Okay. Finally, will this year be clement to emerging markets? This looks like a year, at least the first half, when there will be global slowdown and therefore competitive easing by central banks. We saw ECB react today, overnight, slashing down its growth forecast and, literally increasing a spiel of liquidity through its LTTRO. Likewise, we saw, of course, giant dovishness from Jerome Powell as well. In the end, all this means a good year for emerging markets?
Well, I think it's going to be a volatile year, and markets will not going to be shooting the lights out from here on, because we've already had quite a bit of rally from January to now in most emerging markets, excluding India. So if you look at the valuation disparity between the US markets and emerging markets last August, September, that was at an all-time high, so which means emerging markets were much cheaper than they've been historically. But after this rally, that disparity is now kind of somewhat gone away. So I think from here on, I probably think it's going to be more stock specific. I do think emerging markets will probably outperform the US, given that the growth in emerging markets, particularly with the China factor easing and all that, will be better. The US is already sort of peaking in terms of growth, and earnings are seeing more downgrades. I think India's kind of on its own cycle right now, kind of dissociated from the other emerging markets to some extent because of what's happening India specific to elections. So I think second half might, depending on what happens during elections and after, if we have a stable government or not, will drive what happens in the second half. But I think India could potentially outperform some other emerging markets if things go well in May.
So if you do believe that the worst is perhaps over for some of these global markets in terms of a slowdown, what would you do with these companies that have exposure to global markets? I mean, you briefly mentioned Tata Motors, but then there's Motherson Sumi, there's Bharat Forge. A lot of them have been reeling under pressure because of the slowdown globally. Do you stay away, or do you look for opportunity here?
See, well, I think the worst fears of a global recession, which is what we were seeing in last August, September, that we could have a severe global recession given where rates were going at the pace in the US, that has somewhat eased. So I don't see a global recession of the kind that we were fearing in August, September. There is obviously some slowdown because we've had so many years of strong growth across the world, and that can't sustain necessarily because the catalysts to spur that kind of growth are not there at the moment. So I think growth will definitely be kind of somewhat in the range of what we are seeing right now, slightly up some quarters, slightly down in others. So I think you have to be very stock specific, and the companies that have global exposure, I think it depends very much on the kind of global exposure they have, because if some companies have actually US exposure, I see those companies doing better because their US businesses have picked up. So it depends on where your global exposure is and what sector you're in.
Fair point. Punita Kumar Sinha, it was a pleasure speaking with you after a long while. Thank you very much for joining us and have a great year ahead. Okay, from Punita it is to Sunita. Sunita Reddy, the Managing Director of Apollo Hospitals, joins us now. Again, to celebrate International Women's Day. Sunita, actually, have you seen that advertisement where Amir Khan acts as a sweet shop owner, and since he has 2 daughters helping him, he names his shop Gurdeep Singh and Daughters. Now, I don't know if we can pull up that clip of that ad where the shop is named Gurdeep Singh and Daughters. Okay, maybe we'll be able to pull it out. I always thought Dr. Pratap Reddy, your father, should also have named his company Pratap Reddy and Daughters. I mean, let's start over there. How did Dr. Pratap Reddy manage to make business leaders of all his 4 daughters? What was your upbringing like?
I think he gave us a lot of confidence, and that's very important. The second is that we were totally unafraid. As a child, I didn't know how to swim, and he took me and put me into the pool, and I learned how to swim. So it's his leadership style that he believes that everyone not only has the ambition, but can achieve their ambition if given a chance.
Good morning and happy Women's Day to you, Sunita. Now that you run Apollo Hospitals, what do you do to ensure that women have careers and, more importantly, women keep their careers lifelong?
I think people are looking for a balance. They're looking on how to prioritize their work-life balance, and sometimes it's a challenge. But I think we'll need to learn that every day is different, and that we can deal with these challenges. The thing that we need to do is prioritize, and to realize that within us we have the capability to do both, much more than men do, in fact.
No, I agree. This desire for balanced life, a woman desire balanced life. We very rarely see a man giving up career to have a balanced life and have more family. But anyway, my question really to you as someone heading a big organization is, what does Apollo Hospitals do to ensure that women can manage work and home?
We're the largest employer of women in the workforce. 56% of our workforce are women. And I think the leadership by women, there's a strong sense of bonding, so much so that the men might feel left out. But clearly it's recognizing that women have a lot to contribute, and especially in healthcare.
Okay. Well, you know what, Sunita, CNBC-TV18 can give you competition on that. I really want to know whether, in terms of percentage of female employed, we could be outbeating almost all companies. Let's see. But okay, now with your permission, I want to shift to business questions. First up, the investor community got a bit worried that your promoters, you guys, have pledged your shares. Now, why did the promoters need money so urgently, and what is the timetable now to unpledge your shares?
Yes, to your first question, it was the money was used to increase our shareholding and grow our insurance, as well as some investment into education, setting up trusts for nursing colleges and medical education. So it was used for these purposes, and I think that it was a good investment, because today we will be able to liquidate part of our investments to lower the pledge, and that should happen within the next 6 months.
So within the next 6 months, how much will be retrieved from pledges, in the sense how much can the promoters reduce their pledge by?
I think we can reduce it by 50%, and there is, we are looking at some liquidity event happening.
Okay, let me come to your new hospitals. When will Navi Mumbai become fully profitable?
As we speak, it is EBITDA positive, and we do hope to see very good EBITDA in the next year. I cannot at this time tell you what the amount would be, but there's a good ramp up. Occupancy has moved from an average of 125 to 200. So it will be a good beginning for them.
Okay, so how are your mature hospitals doing now? In the sense, your margins have improved, but do you continue to see that performance? Can you give us some guidance for FY20?
I can't give you guidance, but you've seen us, we have showed growth in the region, from 12 to 15%, and it's been very healthy. EBITDA margins are very strong, and they're 21.3%. So very healthy EBITDA margins, and we will see an improvement in them.
Okay. Okay, if you can't give us guidance on revenue and margins, can you give us some color in terms of how the fourth quarter is doing in, say, outpatient volume growth, average revenue per bed, or rise in bed occupancy itself?
No, I think what we've managed to do is that we've managed to keep the momentum. So probably what you saw in the third quarter is something that you can expect in the fourth quarter, which is, we last year in the healthcare services segment, we did 14% growth in the third quarter. So I think, we are on track.
Okay. Coming to your pharmacy business now, how do you see the revenues and the margins there? And, what would the expansion plans be, say, over the next 12 months?
So if you look at our pharmacy margins, they're currently 5.3 for 3,250 stores. If you look at our mature stores, we're doing around 7.5%. So clearly, we can move to a margin trajectory of 6% over the next 2 years. We're opening about 250 stores each year, and at 10 lakhs a store, I think it's an investment that we can make.
Okay. Finally, Sunita, can you give us a broader vision of growth, say, for the next 2-3 years? The brokerage Edelweiss expects you to double your EBITDA by 2021. Now, is that a good assumption?
Well, considering that we grew EBITDA 22%, I think, with the new hospitals, 30% new capacity, just about contributing to EBITDA, I think you can expect that over the next 3 to 4 years, we will double our EBITDA.
Okay, Sunita, all the best. Thanks so much for joining us. We need to get back to the markets. It's falling a bit right now. So the Nifty is down about 35 odd points. Infosys is the one that's dragging the markets lower. Infosys is now down to the low point, about 1.5% lower. And Wipro and Tata Motors, of course, are news-based stories. So both of those stocks are down about 2 to 3 odd %.